Hey, this is Jed Hardman with Independent Home Loans. Going to take a couple minutes today and just share with you some information about home equity conversion mortgages or reverse mortgages. Let's jump right into it. All right, folks, let's jump right into these. So this is a little bit about myself. This is my wife, my kids. This is them enjoying some summer activities. For the most part, the pool, go to Lagoon here in Utah, just having a good time. Here's my daughter Beverly. She's the one on the left there reading the book, and then here's her sister. It's Kelly and Beverly. They're 4 and 3. They're just plowing away, having a lot of fun at life. There's them. They did a lot of fishing this last summer, and they just were loving it. So they had a very good time with that. It was a lot of fun. Here's them on the first day of school. Most people are not looking forward to it. These two were ecstatic. They were literally dancing on the front porch at our house, just getting ready to go. So it was a lot of fun. And here's the girls again. I always love this picture. I thought they looked like Harry and Lloyd off Dumb and Dumber on it, so I had to take a picture and compare them side by side because they are just a hoot and always having a lot of fun. Well, here we go. So home equity conversion mortgages. Today is more important or bigger than ever for seniors to take advantage of the home equity conversion mortgage, or other you can also call it the reverse mortgage. Okay. The reason is inflation's hit and costs are up and people are having a hard time surviving. Home equity conversion or reverse mortgages allow seniors over the age of 62 or 55 for certain proprietary HECM mortgages, I can't say that today, to pay off their existing mortgage and to get tax-free money without having a mortgage payment. So you have to be 62, or some places you can get one at 55, and those are proprietary ones that are smaller. You have to have a lot of equity to get those, but they are a good mortgage. You still own your home. Okay, that's the biggest myth. People think you're giving up your equity or your house forever and the bank just takes it. That is not true. You own the house, and whatever equity is left when you either pass on or you move out, you either move to the next home, you sell and take the equity, or you go ahead and your heirs get it. So whatever money is left, which is normally a lot, or it can be a lot, that's still there. Home equity conversion mortgages or reverse mortgages are regulated by HUD, okay, and that makes them safe and sound. 90% of them are FHA loans. You can access your money or equity in a lump sum. Usually you're limited about 60% of the funds that year. You can also get a line of credit that will keep growing forever. You can get monthly income, like a monthly amount of money, a disbursement each month. Qualifications are based on your age, your value, and the current interest rate. That's how they determine it. So it's not just hey, this is what the loan to value is. It's a little bit harder to do it because it is based on your age as well, like an actuary table. Credit can affect home equity conversion mortgages, but they're not driven on credit. So I've done many reverse mortgages that have a 500 credit score and things like that. I've had people that we pulled out of, I pulled one just in June out of foreclosure. So you don't have to have good credit to get one. Reverse mortgages, here's just some notes on them. They help seniors with tight budgets. A lot of seniors that don't have a lot of money, they need some cash. It helps them that if they have a tight budget. Seniors can use reverse mortgages to stay in their home, stay near their loved ones, and eliminate the mortgage payment so they can afford to live. Most people on Social Security run into this. They're making $2,000 or $3,000 a month. Their payment's $1,500. This allows them to live with the high cost of inflation right now. Seniors also use their reverse mortgage to build a nest egg, pay for healthcare costs, prescriptions. Some will even travel with it. Home values increasing over the past 5 to 7 years have given seniors a huge padding with reverse mortgages. For most seniors, their homes are their biggest asset. Real estate, even owner-occupied real estate, has always been a great security for seniors. Meaning not just investing in real estate, but your own house you've lived in for 30 years, 10 years, whatever, it may be your biggest asset, especially with the giant bump of 2020, 2021 in home values. Seniors are always wise to hold on to their real estate and to not sell it because it's such a great security blanket. even when you're downsizing, it's better to jump in and buy more real estate and live in it. So it's a very secure place to have your money and your assets. So I'll tell you a quick story here. It's a loan, a reverse mortgage I helped a client get. Her name is Sherry. I think she's 83 now or 82. She was 79 when I got her reverse mortgage. This was her scenario. She's just right here in Utah. So she owed about $180,000 on her house in Utah. Home payment was about $1,350 or $1,300 or so. She was still working as a CNA. She had about $8,000 in credit card debt, which was about $220 a month, just interest and payment, which I think that's gone up a little bit. She was living month to month. She was wanting desperately to quit working. She was basically 80 years old. She didn't want to work anymore. She's wanting to take a few trips to see her family and friends, just wanted to live her life more, wanting to be done and relax. And she was making about $2,200 a month with her Social Security and small annuity, and then working as a CNA and getting by. But she was definitely not loving life. She wanted to quit working. That was her big call to action when I spoke to her. Okay, the results of her getting a reverse mortgage, she paid off her $180,000 mortgage. Okay, so when I say she paid it off, meaning she didn't have that mortgage anymore, now she has a reverse mortgage. This saved her $1,300 a month, $1,350. She was able to retire from working. Okay, she paid off her credit card debt, so she's not paying $220 a month there. She was no longer stressed living month to month. She was able to travel a little bit. I just talked to her just a couple of weeks ago, and I did this one 2021 or so. I talked to her just a couple of weeks ago, wished her happy Christmas, and she told me that she was, had just been down to Arizona to see some family. She's basically stress-free now, and she also walked with $88,900 in cash that she put in a bank account, and she had a small line of credit as well. It wasn't very big. It was only like $3,500, but that is something. So I'm going to show you the example of her home equity conversion mortgage. She starts at $189,000. Okay. 10 years from now, when she's 90, she will owe $554,000. But look at this. It will be projected to be worth $880,000. So who knows how long she'll live in the home or how long she'll live? That's to be determined. But if she owes on the house 10 years from now, $554,000 or so, then it's actually the balance is going to be about $463,000. But if it's worth $880,000, she still has an equity right at about $350,000. So pretty close to what it is today. Many people do not realize the value of their home is still going to go up. Okay. When I say go up, I know it can go up and down, and I'm not saying, hey, all values only ever go up. But over a 10-year period, historically in the United States, there's never been a time when values were lower. So it really just going off of historics, it's very easy to say. She will still have a lot of equity in her heirs, her children. They're still going to walk with a good amount of money when it goes. So that's the biggest question I have from seniors. Where's my money going to go? And this is a good illustration of that. So when you call and speak to me, I'd love to go over that with you. This is the most important part, is the end of year projection, the end of each year projections, or your amortization. Okay, many reverse mortgages have a home equity line of credit. Okay, great option because you're not accruing interest on any money you spend until you spend it, like a credit card. Okay, so you get a line of credit with your reverse mortgage. Let's say that line of credit is $45,000. You cannot use it for the first year. But after that first year, you can tap into that line of credit and spend it as maybe emergencies come up. And that's a great source of you getting some income. And a great option also is with your line of credit. It's a great way for you to not have a payment and some stress-free things. I did a loan for a guy, a reverse mortgage for a guy a couple of years ago that all he wanted his reverse mortgage to do was so he could buy a car every couple of years and not have a mortgage payment. And he just buys like a $4,000 or $5,000 cheap car on his line of credit as it goes up each year. And life is taken care of. He loves it. So he doesn't have a car payment. I'm Jed Hardman with Independent Home Loans. I'd love for you to reach out to me if you have any questions, concerns, or if you have any interest in getting a reverse mortgage, or you have a family member that wants to maybe look into getting a reverse mortgage. They're a very good product. We've had a lot of success with people getting them lately. I'm with Independent Home Loans. My NMLS number personally is 87662. My company's NMLS is 1887282. I'm in Sandy, Utah, and my direct phone number is 801-602-4071. You can always send me a text or give me a call. I appreciate your time and look forward to working with you in the future.